Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back, everybody. Let's take a look again on the Forex market. So in general, we could say that the task, the target for this week that we have discussed for the week, and not only on the euro currency and Great British pound as well, has been achieved. So as we said yesterday, let's not be too hasty with decision making and wait for market action, because it was significant pressure from the dollar index, from the 10-year bonds performance on dollar rivals, it's Great British pound and euro as well. So we said let's wait and see what reaction will happen. The market will complete and hit some targets. So now on euro currency, we see that market is actually around 109. It's long-term support area. You can see not only on a daily chart but also on the weekly. Now it's retesting of this area, which is also 50% fib level of this upward action. So that's what about euro currency. On the cable, the market also has reached the XOP that we have discussed and said 130 scenario that theoretically we could start monitoring, because here's really big chances that market will show some moderate pullback out from here by the technical reasons. It's as we said, confluence support. It was very close to the daily oversold. Right now oversold moves lower, but confluence support still exists around it. Besides, this is potential headline, neckline of the hand shoulders pattern, and it is relatively safe to consider taking the position here, because if even later market starts moving with these hand shoulders to the downside, the forming on the right arm should give us a great chance to move stops to the break even and even to get some good result. If hand shoulders will fail instead and market will keep going higher, all the better. So situation might be even better than in the central scenario. So that's theoretically the point where you could think about position taking. Not necessarily you should do it today, maybe next week. Just keep watching, because it's depend on your trading style. So for example, on the euro currency, if you take a look at it, the same I could say about the cable. On the 4-time frame chart, market has formed just first sign of the possible reaction. This is bullish engulfing pattern, and some traders prefer to take more risk, trying to take the position on the minor patterns, getting smaller potential money risk, because in this case you have to place stop somewhere below this area, but they take higher risk of the loss. The loss might be really small in terms of the money, but the chances to get it relatively significant, because you do not have any background except maybe this particular pattern. Other traders prefer to wait for more extended pattern to be formed. For instance, I don't know, maybe it will be once again hand shoulders, right? So market will have the left arm now, it might be the bottom of the head. Both of these approaches have its advantages and disadvantages. And depending on what your trading style, you could decide what you like more, or theoretically you even could combine both of these approaches, and also think about whether it makes sense to do this on Friday. Maybe postpone until Monday, because usually in the weekend not pleasant moments, not pleasant events recently starts to happen, especially different military news, escalations, geopolitical escalation, something. In general, we've got the background that we have discussed, and now we could turn to the second stage where we plan start monitoring for a clear bullish patterns around. On the hourly chart, this engulfing is taking the shape of hand and shoulders, and in general you could see this some kind of the support resistance line, natural support resistance line forming, which will also be kind of the neckline for this pattern. So minor divergence also here exists. So you could just keep watching for this pattern. For example, if market really will start forming some kind of hand shorts, you could think about taking position or just postpone it on next week. There we will see what to do next. And that's what about the euro currency right now. The same we could say on the Great British pound. Here XOP is completed. If we take a look at the hourly chart, pictures looks very similar to the euro. No particular patterns could be found by far. And from that standpoint, you have to either trying to take position based on these minor patterns that we have, putting all hope on existence of the confluence, placing stop somewhere below the confluence, waiting for the weekend, what will happen next week, holding the position for the weekend. And on the euro currency, you will have to bet on this engulfing. Or, as I said, just relax, enjoy the holidays, and next week we will see what to do. Maybe some really larger patterns will be formed. That choice is up to you. So, but we gradually start forming, start watching for these levels for potential bullish patterns that we could use on the intraday trading. For daily traders, as we said, nothing to do by far because context stands bearish, but market stands on the strong support areas. For the daily traders, unfortunately, you have no options but just to wait for a moderate pullback that potentially might be used for entry somewhere later next week.